Thanks, Ron. I don't. We'll talk a little bit about where everything has come. I would just say for everybody on this call, like some of the things we're talking about, it sounds like we're just talking about huge companies when we're talking M&A, and we're talking about deal structure, which every deal is different. Sizes are different. Most of the people on this call are probably smaller, mid-sized companies. And I just want you to know that I'm currently working on 3 deals right now where the deal structure is 80% or higher cash at close, right? So it's we're talking trends in general where we're going, and M&A. When I say it's going to be really active in freight forwarding, custom house brokerage, that's going to be with the smaller mid-sized companies. So as Ron said, some of these questions look really good. So let me grab, with that said, my crystal ball, right, and look a little bit into what's going to be hot in logistics M&A in 2023. First, logistics in general, as Ron and Janet both talked about. There's a spotlight on freight forwarding, custom house brokerage, and drayage, and everything in the supply chain. That's not going to change in the next few years. So while buyer market or seller market is always who has the power, the sellers, the companies that have built good companies in this space, are going to be sought after greatly in 2023 and beyond. So logistics in general is going to be hot. The non-asset based side of logistics is always been at the higher side of valuation. And that's even stronger today. Freight forwarders, customs house brokers, truck brokers, those companies, demand very high multiples, and without talking multiples, they demand very high valuations, in order for them to sell their company. And as you get more interest in that, more buyers, that drives up prices, obviously, and global supply chains are going to be the talk of 2023 and 2024. Logistics tech is already off to a crazy start. You've probably seen the CargoWise acquisitions, and I think they've 700 million just so far, right? So there's going to be a lot of activity in valuations, and forwarders and customs house brokers who have invested in technology. It's important to tell your story so you get a higher valuation. One of the hottest topics of the last few years that we promised that we would talk about is the digital freight forwarders, that had raised a lot of money with the idea that they were going to disrupt the traditional freight forwarding and customs house brokerage model with technology. First, I respect people who want to drive change. In the 1980s, it was Fritz and Expeditors, right? And other global freight forwarders that were saying, okay, well, we were a small forwarder, but we're going to become this huge company. We're going to use technology to do it. We're going to disrupt the industry, and they did it, right? You look at the Expeditors story and the Fritz story, technology is at the core of their stories. So they were the disruptors of their time, and they made a lot of people very wealthy. In 1995, I was 31 years old and had a Danish co-founder. We'd actually, got drunk on Miami Beach and came up with the idea of a business plan to working for a freight forwarder, traveling all over the world, and doing a lot in South America. And we saw an opportunity, to kind of bring technology, Windows-based, the internet. It was all hitting at that time. People had typewriters. Our company had typewriters on every desk, fax machines everywhere. So I kind of look at, we were the disruptors of that time, and it wasn't just us. There were a lot of people like me, that Richard White in Australia, Hank Ulrich, Chris Crane, Johannes Riga in Germany, Amit Maheshwari in India, Dave Hockersmith, Chuck Schubert. We were all trying to disrupt the industry. And the problem with the digital freight companies now that basically have told investors that we're going to take all this business from these traditional guys, is that the technology that the traditional people are using is getting stronger every single day, with more technology coming into it. And these disruptors that have built their own system, like an Expeditors or a Fritz did in the 1980s, they now have the legacy software, right? And they also, their whole model is, we're a technology company, not a freight company. So, it's, you can't really go buy CargoWise and implement it, or Descartes, or, whatever. So you're gonna see a little, and then also the venture capital and the cost of money for them has gone way up. Their investors are probably getting a little bit more skeptical. I'm not one of the people that likes to throw shade on them, because I do think that they have some great ideas and some ideas that are coming, but I do think 2023 is going to be a difficult year for those companies, and we promise to address that in this webinar. The other big things for just growth, is just, I like to say I'm not an economist, but I'm married to one. I talk international business pretty much most of my waking hours. I enjoy it. It's fun for me. And you're going to see a lot of changes coming just by some of the conflicts from Russia, our largest trading partner. We seem to be going the wrong direction on a couple of things. And, that's made the energy markets gone crazy, which has made project freight forwarding, a great business right now. So there's a lot of that. We're very focused on project freight forwarding. That's very interesting to us. Countries like India, Venezuela, India and Vietnam, sorry, they have an opportunity at the moment to, kind of take it to the next step. The problem is, you can't just move manufacturing plants, to one of those countries, because it still comes down to raw resources. You have to have that, which, it's taken decades to get where we're at with our trading partners, and now it doesn't change overnight. One of the areas though that is changing rapidly, and it's one of our big focuses for 2023, is the southern border of the United States. So if you're strong in the southern border, your phone has got to be ringing right now, right? Because every buyer that we're talking to is eager to do more stuff in the southern border, because their customers are telling them that we're coming back to Mexico, and that could be good for America. That could be good for lots of different issues. But if you're in that space, you're lucky, and congratulations. So as we get ready for the Q&A portion, I'm just going to ask my partners the question that a lot of you are asking and thinking about, I'm sure, if you own your own business. And then we'll take some general questions. We've been told we can go a little longer for people that are interested in it. And again, we're going to be in New Orleans. So the question is now the right time to sell your business? And Jan, you get the first shot, and then Ron, you'll answer that question, and then I'll give you my 2 cents. Jan?
Okay. So if you ask the question, is now the right time to sell my business, it means that you're actually thinking about selling your business. So if you are, then the answer is yes, now is the time to sell your business. And the reason is twofold. The first is the lack of predictability. Monty Python once said nobody saw the Spanish Inquisition coming. Well, nobody saw the pandemic coming. We don't know what's going to happen in the next couple of years. There's no certainty that if you don't sell now, that your company will be worth more down the road. So it's a guessing game all around. So the object is to get fair value. And you're in a very favorable position right now for 2 reasons. As we said, there's a lot of heightened interest in doing acquisitions in the logistics space. And the other is you've probably just pocketed a windfall amount of money. So you're better positioned to take a little more risk in selling the company than you would have been before. Everybody wants to sell at the top, right? Sell, buy low, sell high. If you want to sell at the top, you need to get a time machine and go back 2 years. But for lack of that, you should prepare now. Because the risk has gone up, because the predictability has gone down, the risk has gone up. The buyers are taking less risk, and one of the ways they're taking less risk is by being ever more diligent in the due diligence process. They're digging deeper and deeper, spending more money in the process. And that means that the sale process is longer than it used to be. Something that used to take 5 months is taking 7 months now. If you went to market now, you'd be fortunate to close your deal by the end of the year. If you go to market, if you wait a few more months, it won't be until 2024. So better to do it now than to wait, because there's no certainty in waiting, and it takes a long time to get the deal done anyway. The other reason to do it is that you don't really know what your company is worth and what you're going to get until you go to market. And once you go through the process, you'll find out one of 2 things. Either the company is worth what you hoped it would be worth or more, and you make a deal, or it's not, and you get a roadmap to what you need to do with your company to position it to get that amount of money later in the process. So there's no downside here. Even if you go through the process, there is in essence a payoff for going through the process, either by completing the deal or getting the roadmap. Ron, what do you think?
I agree, Jan, and especially on the roadmap portion of it. I'll be quick on my answer so that we can get to some Q&A here, but just two things that I want to discuss. First off, is a really good way to get a roadmap, and we like our sellers to do this. And anytime you deal with, especially with a financial sponsor, they're going to do it if they're interested in buying you, and they're going to do what's called Q of E. You'll hear the term Q of E. It's quality of earnings. It's not an audit. It really looks at your business, does look at all the financial aspects of your business, but it looks at the story of your business and everything else, and it comes up with a really good roadmap of valuation and the red flags of your business. So we think that that's an excellent thing that you should look at. But it leads me to my final point, and my final point is, don't wake up one morning because of some type of an emotional decision, whether it's something that happened in the business and you just don't want to do it anymore, or a family issue or something that's happened in your family, and you just decide, I woke up and I want to sell the business. Don't do that. As I mentioned early on, we have this Logisyn education series, and if you send us a question on it and you want the information, we can send it to you. But we wrote a white paper on this a couple of years ago. It's called the 5 Ps, and proper planning prevents poor performance. I think that's real important for you to understand. Plan for an exit. Most people don't have an exit strategy, and you need to have an exit strategy and how you're going to do that and how you're going to work around that. I think that's critical, and make sure that you know when you get to that point of looking at a potential buyer of your business, or you're looking at buying somebody's business, that cultural compatibility is the right fit for you on both ways. 50% of all mergers and acquisitions don't live up to the expectation of the buyer, and that's because of cultural compatibility. So Chris, I'm going to turn it over to you.
Yeah, so I agree with that, obviously, but I kind of take an entrepreneur approach to it. I was 42 years old. We'd built 10 years. CargoWise was our product in the United States, and again, I'm not taking credit for everything that happened, after that, because there's been a lot of acquisitions and a lot of things that have happened. But our customers loved us. I was having fun. We had a great future. We're finally making money. At least a little bit of money. And, we had a phenomenal team. Many of them are good friends of mine. They're still at CargoWise. So why did we sell? And, my Danish partner wanted to go back to Denmark. We were looking at that. And, our customers loved our products, but they wanted us to do more. Our US customers wanted to go overseas. There are a lot of things that I could see as growth opportunities. So at 42, I was like, yeah, I could see a huge opportunity here, but that risk of it was massive. And probably like a lot of the entrepreneurs on this call, right? You know what you could do to build, an Expeditors, but it's going to take a lot, right? You might have to, do a lot of things with that. And I just happened to meet Richard White, at that time, and we put our companies together. He raised a little bit of money, and that's an example of what a merger can do for a company, not just for the owners, but also for the employees and for the customers. It does. There are the horror stories like the 50% because they didn't put the wrong companies together. But if you put the right companies together, it's not necessarily a horror story for your customers and your employees. It can be the best thing that ever happened to them. And, they can grow, they can make more money, they can have career opportunities, your customers can do more things with you, they can be even more loyal, give you more business. So, everybody seems to focus on the negatives of M&A. Sometimes it's a dirty word, and people that do M&A, I feel very proud of what we do. I got a message that I shared with our team yesterday, true story, from a client of ours that we helped that just called to just thank us about how's it gone so far. I don't consider a deal a good deal is if both the buyer and seller aren't happy with the deal, and we keep in touch with them, right? So hear the horror stories, be aware of the horror stories, but just realize M&A is not always bad. So with that, Megan, we're gonna, turn it back to you, and you ask any questions that you want to ask. And again, I know we went on, I think we're going a little bit over time, but I think we can also, continue the questions offline too. So back to you, Megan.